we did get a note from Joe in Duxbury, and
Okay.
he's asking about a 1031 exchange.
Oh, cool. So that kind of flows nicely with estate planning, because what is your estate, right? It's everything that you have. It's everything that you own. How do you pass along everything that you own? But when you're talking about a 1031 exchange, a lot of people are like, what is that? Well, 1031 is a code it's a section within the IRS code, similar to a 401k. Why do they call it a 401k? Because that's the section in the IRS code, right? Very simple. 1031 is the section in the IRS code that allows somebody who owns a real estate investment property to transfer that transfer the proceeds of that property into another one. So oftentimes we have clients that come to us that say, Mark, we have a property in wherever town, Massachusetts, and it's been a great investment property, but we want to sell it for whatever reason. We want to capture the top of the market, or we're really, we're too far away and it's hard to manage it, or we really don't like the property, so we want to trade it, right? So you're trading it. It's also referred to as a like-kind exchange because you're trading it for like kind. So if you were to sell that property, Larry, you would have capital gains taxes, right? Because you probably have some appreciation, some profit, if you will, and that gets taxed. Likewise, you probably have your accountant, your CPA, depreciating the property. So you have to pay a percentage of that back as well. So what people don't realize is, oh, wow, we could sell our 3-family in Dorchester and we could make a lot of money, but they're not really calculating through what that's going to cost, what the tax associated with that is going to be. So what a 1031 exchange allows you to do is say, okay, I have a 3-family in Dorchester, but I want to convert that to a 6-family in Abington, which is a little bit closer to my house. I can manage it better. And as long as the price of that property in Abington is equal to or exceeds the sale price of your property in Dorchester, you can transfer all of those proceeds tax-free. Now, it's not free of all tax, it's deferred. So what you're doing is you're actually moving those profits into the next property, and you don't have to pay tax on those profits, if you will, right then and there. It's deferred for later. So basically the IRS, believe it or not, is giving you an interest-free loan. They're saying if you keep the housing stock going, if you continue to provide housing for people, we're going to hold off on having you pay taxes on that property, and we're going to encourage you to keep going and continue to be a good housing producer for other people. And we enjoy it a lot. What needs to happen, there's a lot of intricacies. You obviously need your real estate attorney, which we can obviously help with. You're going to want your CPA or accountant involved. And then there's what's called a qualified intermediary. That's somebody that the IRS acknowledges as the institution, the person, the folks capable of holding the money. Because what is very important to understand is that the person selling the house can't touch that money. If they touch that money, they receive that money, then that's taxable. So what happens is the sale proceeds go into this qualified intermediary, a QI. It goes into their account, and they hold on to it, and then they transfer it into the new purchase, whereby that person never actually touches the money. It is transferred. It is conveyed directly from the sale into the purchase. But if anyone has questions about that, we'd be happy to talk with them, Larry, because it's a great estate planning strategy as well. Because if you think about it, if you continue to do 1031 exchanges and transfer your properties into bigger and better, and the cash flow is fine, you don't have to sell, it's a benefit to your estate because there's what's called a step up in basis when you die. So they call it swap till you drop, but that's a whole nother conversation where we did a podcast on it, Larry, and on our Elements of Styles podcast, episode 4, I think. Early on, we interviewed a qualified intermediary that talked about that strategy, is continuing to transfer the property, and then upon death, the recipients, the beneficiaries, if you will, receive those proceeds tax-free.
How can people find out more information and get in touch with you?
Larry, great question, and I appreciate that. The best way is through our office phone line, 781-319-1900, and our concierge will make sure that you're speaking with the right person. But I always encourage people to go to our YouTube channel. We have a YouTube channel at Styles Law, which has questions just like Joe's from Duxbury, asking questions like this, and we answer those questions. So if you go to YouTube, Styles Law, you could search pretty much any question, and I think we've got a video on it. We've got over 200 now, Larry.
Oh, that's great.
Yeah.
So check that out, and you'll be back in with Rob on next Friday.
Week.
Rob will be back here. I know we're going out on the road one of the days, so maybe we'll see you. Maybe you'll come down. Rob's going to talk about where we're going to be next week. I don't want to give it away.
Oh, I love it.
But we're going to be out on the road.
I love it.
Next Thursday, September 1st. Can you believe that?
No, I can't, but here we go. Back to school, folks.
I know. Fall's right around the corner, and got to get that pumpkin spice coffee pretty soon, the muffins and stuff.
That's right. Get the football going.
Yeah. All right, Mark. It's always great to talk to you. And
you too, Larry.
We'll get together next week.
All right. Have a great week, everybody.